our belief has been and continues to be that we are in a secular bull market. And secular bull markets typically last anywhere between 13 and 18 years. And depending on where you measure the beginning of this bull market, whether it was in 2009 or 2013, this pandemic and bear market last year was likely a cyclical bear within the context of a secular bull market. So, we could still see this thing run, I think, for another 5+ years before we get a top in what's been a long wave bull market. And I think that top ultimately comes because valuations become way too stretched. And there are pockets of the market right now that are frothy, to be sure. But by and large, the S&P at 21 times earnings, with interest rates still negative across most of the Treasury yield term structure, and with inflation still running fairly tame, to us does not seem overbought. So I think the demographics continue to push the market higher. I think on yields, when we get north of 3%, it becomes a little more challenging. And until we get there, and as long as we have corresponding economic growth with that, things will be okay.
Okay, what about the Russell 2000? I mean, we talk about the Dow Jones, the NASDAQ, and the S&P 500 all the time. But that little one, the small cap index, has really been running away. What's your thinking around small businesses and investing there?
Yeah, and this highlights the value and the free lunch of diversification. So we own small caps in the portfolio as well. We do this through IJR, which is a very low-cost ETF. And, our thinking has been that if you back out the aperture a little bit, small caps are just breaking out from what was a top in the third quarter of 2018 amid what was a trade war, which was seen as disproportionately hurting small businesses here in the United States. So we've had a big run in the Russell and in the S&P 600. And now, in fact, it's actually moved higher than the NASDAQ since the pandemic lows last March. It's more than doubled. But again, if you look at the valuation of small cap relative to large cap and relative to more growthy parts of the market, I think there's a reasonable case to be made that small caps look attractive here. And if the economic story this year, which is 5, 6, 7% real GDP, does come to fruition, then small caps should do well in that environment.